Central banks are accumulating more gold than they ever have in recorded history. Why are they doing that? That line shows you zero. Look at 2000. What was happening in 2000, moving into 2000 from 99? Y2K, do you remember that? But they stopped selling off and leasing it out as heavily, and it was going up from there. And by 2010, they were net buyers. So we crossed that zero Rubicon. And now smart money is voraciously accumulating because they know what they are doing to this stuff.
Today's great breakout story is gold, which earlier today experienced another jump and reached $1,985, its highest level since mid-May during the thick of the U.S. banking sector crisis. Despite higher government bond yields, the yellow metal continues to shine bright. Though it pulled back after hitting the $1,985 resistance, if it manages to cross it, we could be looking at a move beyond $2,000 and close to all-time highs. After hitting $23.21, silver is also close to one-month highs. After registering steady declines over the past week, this is definitely a big win for metals investors. But there's a bigger picture here. Gold is often considered a safe haven asset for investors during turbulent times, and probably not since World War II has the world been this turbulent. But that's not the breakout story. The breakout story is that the recent price moves means that more investors are realizing that we are indeed in turbulent times, and gold and silver can help protect their wealth against whatever's coming. Lynette Zang, renowned metals analyst, former stockbroker and chief market strategist at ITM Trading, believes this is a decent opportunity to accumulate as much metals as you can. While discussing current trend cycles and whether or not you should be investing in the metals market at the moment, Lynette highlights the important things to focus on, such as central bank accumulation and counterparty risks. According to the renowned metals analyst, the world is quickly drawing close to all-out chaos and confusion. She highlights the important moves you should be making now to prepare for that future. We will now bring you clips from the video. But before we do, please ensure you hit the like button, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations in the comments section below. Thanks and enjoy.
But what we're looking at here is spot silver. And I know a lot of people that have been accumulating silver, and the same thing with gold. Oh, silver is not doing anything. Okay, well, it is in the premiums here, but what you have here is a wedge formation. So if you have a ruler, you can print out the charts, stockcharts.com. You can go and do this for free, and you just see what you see here are a series of lower and lower highs and higher lows. And this is forming like the wedge of a cheese. At some point, it is either going to break out above the wedge or break down below the wedge. If it breaks out above the wedge, then the most likely next outcome is something like this, where you get a significantly higher pop. If it breaks down below the wedge, then you are most likely to see the spot price decline. They can make that happen just by creating more paper silver. So don't be discouraged by that. Use this as an opportunity. When should you accumulate? Where are we in there? Because right now, where we are is in the bear trap awareness phase, nearing a wedge, break out above or break down below. Don't be fooled, because the next thing that is going to happen is once we break out above, you're going to see the spot price go a lot higher. But in the meantime, this is also like a mini cup, isn't it? It's like a mini cup. And so the smart money is accumulating the physical silver as fast as much as they can. This is a spot gold chart. So this is the contract. We know the physical markets have been growing, but this is the spot. This is the one that most people look at and say, gold isn't doing anything, blah, blah, blah. And this does guide the price of bullion and just basic. But where are we? Because this is one of the pieces that we needed a breakout, and we got it, and that was back in 2009, 2010. And spot gold is still in the awareness phase, but look at this triple top, okay? So here's that, there's that, and you can see that it moved up, formed that cup formation, broke out of that cup, and so it's taking a tremendous amount of paper contracts to suppress the price that you see of gold. That is not happening in the physical realm as much, although in the lower quality in the bullion and all that, sure, that's going to be impacted by this. That's your opportunity. Because quite honestly, personally, knowing, having lived my life in this area in one way or another, I would always rather hold the lion's share of my wealth in an undervalued asset that is in a long-term positive trend, and the least amount of my wealth in an overvalued asset or instrument that is in a long-term negative trend. But look at how they have suppressed it. Triple tops are rare, right? But a rising gold price is an indication of a failing currency. And once you really understand that currency is failing, and that's what that inflation is about, you make different choices. You get your wealth out of the system that is losing value constantly, compounding it regardless of how they make the paper contract.
During the video, Lynette also discussed increased central bank accumulation and what it means for gold prices. Central banks, some of the most savvy investors with a lot of capital, have bought more gold in the last 18 months than they did in the preceding 50-something years. In 2022 alone, the world's reserve banks bought 1,136 tons of gold, the most since 1967, the second highest value since 1950, and more than 150% compared to 2021. What makes the renewed interest in gold and silver even more exciting is that in the 4 decades leading up to the global financial crisis, central banks were completely focused on loading up on dollars and U.S. treasuries and reducing their gold holdings. Everything changed in 2008 when the gradual gold hoarding began. However, the real craze for precious metals didn't start until 2022, after the United States and other Western countries announced a bombardment of financial and economic sanctions against Russia. In 2019, for example, central banks bought a total of 374.1 tons of gold. At the time, the World Gold Council reported it as a historic high. But that was only 32% of what they purchased in 2022 with no signs of slowing down. Let's get back to Lynette as she discusses central bank accumulation and other things you need, in addition to gold and silver, to survive the coming collapse.
Because what we know is central banks are accumulating more gold than they ever have in recorded history. Why are they doing that? That line shows you 0. Look at 2000. What was happening in 2000, moving into 2000 from 99? Y2K, do you remember that? They didn't know if the computer systems were going to be able to handle that transition, and they did not want you buying gold, physical gold, and holding it in your possession. So what did they do? They sold it, they leased it, they did everything that they could do to suppress the price. But look at 2005, if you would, okay? That's when they were really doing that significantly. And what was happening back then? We were in transition, but they stopped selling off and leasing it out as heavily, and it was going up from there. And by 2010, they were net buyers. So we crossed that 0 Rubicon. And now, smart money is voraciously accumulating because they know what they are doing to this stuff. So the other thing I want you to ask yourself is, what does this pattern tell you? I know what it tells me. I know what all those patterns tell me. And I would rather be, I don't care how early. Because if you're 1 second too late, you have no more choice. You lose your freedom and your liberty. Why would you make that choice? And that debt bubble has popped and lost all anchors. The foundation of our system has lost all anchors. How does that make you feel? What are you going to do about it? Food, water, energy, security, barterability, wealth preservation, community, and shelter. If you can get into position with that, then let them try to do it. You can say no. You can make a stand, but you can't do it alone, and neither can I. I've been so fortunate because I knew in 2008 that the system died. So I jumped on building all of those pieces that we need, the food, water, energy, etc. But I have a community around me that's helping me execute this strategy. Gold and silver will buy you freedom and liberty and choices, but community is where we can really find our safety.
Gold and silver prices might climb even higher in the coming weeks. In what is a clear departure from the typical Federal Reserve Chair, Jerome Powell recently suggested that the central bank will not raise rates in the short term. The U.S. dollar index consolidated losses after Powell's statement, but remained above 106. There have also been 3 consecutive declines in stocks and increasing volatility in the bond market. The 10-year Treasury yield recently hit 4.99%, the highest since 2007. On the other hand, the 2-year yield decreased from 5.26 to 5.16%. With all of this volatility and chaos, it's no surprise that investors are rushing towards safe haven assets like gold and silver. Please share your thoughts on Lynette's video in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.